Perhaps the most direct place I like to go to understand performance in this space is the Forge Private Market Index. It was created to directly address the lack of good benchmarks in the space, and also to give people a place to look to see how performance in the secondary market is moving. Historically, there have been a lack of benchmarks. I've seen people using public equity benchmarks, such as Nasdaq 100 or the Russell 2000. I've also seen people using private equities, manager returns provided by people like Cambridge to proxy performance in this space. But both of those are materially different and do not show the performance of private secondary market trading activities. And the Forge Private Market Index exclusively uses private market price data, reflects the price movement of 75 of the most liquid names in the space. As such, the Forge Private Market is always a place I go to first to understand the performance on our platform and in this space. To answer your initial question, the Forge Private Market Index is down minus 17% for the year through June 30th. And this has been in contrast with the public markets, which, as you well know, are up about 40% for the year through June. And that's led by mega cap tech stocks. Here, this chart shows the full history of the index. So you can see how the private market index has performed since the index inception at the start of 2019. You can also contrast it with some commonly used public market indices. You can see the dramatic outperformance of the private market index in the 2019 to 2021 period, and then also the bear market that began in 2022. One thing I also find very interesting about this chart is the apparent lead-lag relationship between public equity market and this space. What we see in the 2020 and 2021 period is that the strong rally started first in the public markets before dramatically taking off a quarter or two later in the private market. Meanwhile, at the tail end of 2021, the drawdown seemed to hit the public and private markets at nearly the same time. So what I'm watching most intently now is this performance dispersion between the public and private markets in 2023. Year to date, the public market is leading dramatically, and it'll be really interesting to see if the private market will follow. Related to the index, another chart that I like looking at is this one, showing the performance of the underlying Forge Private Market Index constituents in green, gray, and red bars, overlaid with a transparent bar chart of the Nasdaq 100 ETF quarterly performance, represented by QQQ. Green shows the percentage of index companies that had positive performance in each quarter, while red reflects the percentage of index companies with negative performance in the quarter, and gray is flat. To me, this chart helps us better get under the hood of the index and see if there are potentially any indications of a turning point in the market. As you can see, when Nasdaq was posting a lot of positive quarters, that sentiment does appear to have permeated private markets, leading to a higher percentage of companies trading up in our space. Turning to recent months, you can see that we're getting an increasing share of companies with positive returns, even though the aggregate index performance has yet to turn positive this year. So this is one place I look to perhaps get an early indication of turning points in the market.